Hello and thank you for visiting www.sanjoseshortsaleSpecialist.com. This part of the video consultation is about the tax consequences after short sale and do you have to pay any money back in taxes to the IRS or state. I'm not an attorney or CPA, but this video is meant, if nothing else, to at least give you a general idea about what any possible tax consequences might be and the possible exemptions that are out there. First of all, what happens after a short sale is typically whatever money that the bank loses, the bank will issue a 1099-C the year after the short sale is complete. This is a cancellation of debt for the remaining balance they have forgiven you. But it's up to each person individually to determine if they will have to pay any taxes with the 1099-C, because it may or may not be a taxable event for the state or IRS. And it really depends on your personal situation. But I will go over some of the exemptions that are out there. The first exemption that you have is the 2007 Mortgage Debt Relief Act, which applies to the IRS at a federal level. Basically stated, it says that if this is your primary residence and you did not pull out any money out of the home, or you didn't refinance or use any of that money for other ventures or items, typically you'll be excluded and you will not have to pay any taxes after the short sale. Now, this provision ends at the end of 2012 and is capped at $2 million. Now, let's say if you did pull out money out of your property, you may still be eligible for this exclusion, but you would need to show that this money was spent in repairs or improvements on the property. You can learn more by going to irs.gov and searching the term Mortgage Debt Relief Act of 2007. Now, there is also a very similar provision for the state of California, which is called California Senate Bill 401, which was passed at the beginning of 2010. And there are some slightly different guidelines, but they're very similar, but you would definitely need to talk to a tax consultant about this. You can learn more by going to www.ftb.ca.gov and search the term California Senate Bill 401. Now, if for some reason this isn't your primary residence, or this is an investment property, or perhaps you pulled out money out of your property and used it for other purposes, there is another exclusion which you may qualify for. And this applies for both the state and federal level. And this is called insolvency. Basically stated, what insolvency means is if your liabilities exceed your assets at the time of sale, so you add up all your debt you have, and now if all the debt you have exceeds any assets or the fair market value of your assets, then you would be deemed or declared insolvent. And this is much easier to qualify for, but again, you'd want to speak to your tax advisor about this. And of course, the last option you have is filing for bankruptcy protection against your taxes. Now again, I am providing this information as a general idea, and by no means am I an attorney or CPA, so you definitely want to make sure you speak to someone qualified. If you do not have someone yourself, I do have people that we work with that I can be more than happy to refer over to you to answer any of the questions that you might have. And that is basically the tax consequences after a short sale. I do a free in-person or over the phone consultation if you have any additional questions. And each person's situation is different, so please feel free to give me a call anytime. My number again is 408-504-8772. And thank you again for visiting www.sanjoseshortsalespecialist.com.